As consumers struggled with dramatically higher mortgage rates, rising home prices, and a dearth of available properties, previously occupied home sales in the United States declined in October for the ninth consecutive month and slowed to the worst pre-pandemic sales pace in more than 10 years. The National Association of Realtors reported Friday that existing home sales dropped 5.9% from September to a seasonally adjusted annual pace of 4.43 million last month. According to the NAR, the current stretch of consecutive monthly sales reductions is the longest on record going back to 1999. Despite the decline, home values increased last month, albeit more slowly than they had been earlier in the year. In October, the national median home price increased 6.6% over the previous year to $379,100. According to Lawrence Yun, chief economist for the NAR, the median home price is down roughly 8% from its peak in June but is still 40% higher than it was in October 2019, before the outbreak. He claimed that was seriously harming affordability. The average household income has not increased by 40%. For the third consecutive month, fewer houses were on the market. According to the NAR, there were 1.22 million properties for sale as of the end of October, a 0.8% decrease from September. As U.S. mortgage rates have increased significantly from a year ago, slowing down the housing market, Americans' purchasing power has decreased. According to mortgage buyer Freddie Mac, the average interest rate for a 30-year mortgage was 6.61% this week. The average rate was 3.1% a year ago. For the first time since 2002, the average rate exceeded 7% late last month. This can increase monthly mortgage payments by several $100s and deter homeowners from purchasing a new home after locking in an extremely low rate in the previous few years. There are fewer houses available because of it in part. For the fourth time this year, the Fed increased its short-term lending rate by 0.75 percentage points, or 3 times its average margin, 2 weeks ago. Its key rate is currently between 3.75% and 4%. Mortgage rates often follow the yield on the 10-year Treasury note, albeit they don't always reflect Fed rate increases. The yield is affected by a number of variables, such as projections for future inflation and the demand for U.S. Treasury bonds abroad. Since there aren't many homes for sale, sellers frequently get multiple offers, especially for the most affordable properties. Many first-time buyers are delaying their purchases due to the combination of rising home prices and higher mortgage rates. According to the NAR, they made up 28% of sales last month, down from 29% in September. First-time buyers often accounted for 40% or more of sales historically. In today's market, first-time buyers are truly struggling, according to Yun.